Good morning, everybody. Welcome to the Moving Markets Podcast. It is Wednesday, December the 17th, 2025. U.S. stock market has been open for about an hour and a half right now. I'm recording this about 9 a.m. my time. So we've had about an hour and a half of trading. And what started out looking like it was going to be a good day took a very drastic turn, and it did so pretty quickly. Especially with the NASDAQ. NASDAQ down 230 some odd points right now as I'm recording this. It's already been down deeper than that, I think, at one point in time. Well, it's bounced a little bit off of its low. I thought it was down even farther than that. But all of this right here, all of this was positive territory to start out. Went a little tiny bit negative right here, came back up to about break even right in here, I believe, and then it's just dropped off a cliff about 1 hour into trading. It just took a dour turn and it's escalated, trying to bounce a little bit right now. Oracle is leading the charge on the NASDAQ in terms of what is selling off. And still, it's still hard to, it's a little bit hard for me to figure out. I feel like this is kind of a self-perpetuating thing. I feel like to me, it feels like the people that are supposed to be the experts have absolutely no clue why things are selling off. It's easy to say AI has been overhyped or AI went too high too fast and created a bubble. That's easy to say because they really don't know what's going on. Many of these experts, I believe, don't have a clue what a company's spending in AI really means. And what I mean by that is they don't know how to evaluate whether or not the spending that a big company is doing in AI is going to have a payoff. So when they see this rotation out of tech stocks because of some perceived things that are going wrong, they pile in and they pile on, and it becomes this self-perpetuating thing. I mentioned at the very beginning of this week or end of last week, I think if anything, between now and the end of the year, I think it's too late to have much of a Santa Claus rally. I don't know if there will be any type of a catalyst event that could save us from a continued sell-off into the end of this year, and then hopefully early into January, before we get more than a week or even a week and a half into January, we start to see things turn around. Now, there's always the possibility of some catalyst event. There's always the possibility that something happens that sort of flips the script and turns things back the other way. We're going to get some CPI data tomorrow. This is November CPI. It's coming out a little bit late, but not horrifically so. Normally, we would get November CPI data in the first week of December, or maybe in the second week of December. We're getting it. We're coming to the end of the third week of December, and so I guess depending on how you define a full week. But regardless, we're getting the data a little bit later than we normally. I think normally we would have had the data first part of last week. We're definitely getting it a little bit later than normal. But it's not delayed the way some of the data we got last week and the week before were. So if those CPI numbers come in really good, like the consensus estimate is 0.3% on month over month, 3.1% year over year, it would be fantastic if this number came in like at 2.9, if this number came in at 0.2 instead of 0.3. And then core is expected to be 3. Anything below 3, even if it was only 2.9% year over year, I think the markets would perceive that as a really good thing. So that is an example of something that could be a catalyst to sort of flip the script and change the narrative. There's a lot of people that are worried that the Fed is not going to do a rate cut in January. I got to be honest with you. This is one of the few times where I'm more in the camp of the minority than the majority, thinking that we are going to get another rate cut in January. I think it's going to come from a combination of what I hope is some lower CPI data, some good spending numbers. Remember, this This meeting doesn't happen until the very end of January. So you've got another CPI report, another PPI report, besides the one coming up. You've got another PCE report. You've got 4 weeks of jobs data. You've got a lot of things that are going to happen. And I think they're all going to paint a picture of inflation staying under control in spite of these last two cuts we've had. And if there's no evidence that these last two cuts have created any kind of a blip or spike in inflation, then you're going to see this shift. You're going to see the 75% move over this way and the 25% be over here. So those are some of the things that I think could turn us and keep us from having a longer, deeper sell-off than what is taking place right now. But it's going to be interesting. As you can see the NASDAQ, like I said, trying to come back a little bit. Definitely off of its session lows, but lots of time still left to trade today. And who knows what that might ultimately bring by the end of the day. It's early to tell. We've got most of what we've got going on in the portfolio is good. Micron is taking a big enough hit today that the short side of the put side of the trade, not the short side, the put side of the trade is completely in the money now, with Micron selling off $3.50. If we get towards the end of the day today and the entire put side of the trade is still in the money, then even if it's just for a tiny, tiny profit, we've got to close the trade tomorrow morning. We can't risk that the put side of the trade is completely in the money and then Micron hits a really, really good earnings number that skyrockets the stock to the upside. And then suddenly it's jumping up, but not nearly enough to guarantee us the profit that we need. And the announcement comes at the end of the day today, so we've got to decide before the end of the day today. I'm doing the podcast now, but I will be tuned back in when there's about an hour left to trade, and that's when we've got to decide what to do. Right now, as we speak, Micron, I believe it's switched to being profitable. Let me update this really quick. I believe Micron is profitable, but only by a little bit, not by a huge amount. Actually, in spite of the fact that Micron is down $4.50 a share, that the price is jumping around so much, I show that it's down a little bit right now, which is idiotic in my opinion. That's absolute, complete stupidity. And that's because there's just too much implied volatility right now in the options. I show it down about 1.5. See, this shows it up a little bit, but on my live trading, this has got to have a little bit of a delay on it. On my live trading screen, my open position shows that it's down about 1.5%. And now I show it positive by 1/3%. So it is jumping around a lot. And that cannot be unexpected. That can't be something that can't seem too crazy to anybody. We do have Amazon up a little bit today. AMD taking a big hit today. NVIDIA taking a big hit today. They're respectively down 4% and 3.5%. Tesla's down a little bit, but still trading so far above the strike price of our short call that I'm not worried about Tesla. Google is down 2.5%. We're far enough out in time on the Google trade that I don't think that's going to become any kind of an issue. I don't think we're going to have to be too worried. You can see it's dipping below 300 right there, but I think that'll turn and go back or maintain. And if it doesn't, we can adjust the trade. So it's not a hard thing to make an adjustment to that. But yeah, definitely some stuff getting beat up on. Lululemon is flat to just a little tiny bit positive. If you're not already out of the Lululemon trade, should be an easy exit today. If they finish anywhere above, I would say 202, 203, you'll be able to get probably close to your maximum profit out of it. Right now, I show that I'm just maybe 20 cents, 15, 20 cents away on the mid price from where I could get out with almost max possible profit. We don't have an open trade on them, but Marvell is down a tiny bit today. Coreweave getting another It's almost another 7% down. Coreweave taking another $4.50 hit, and Applied Digital down almost 6%, or actually just went over 6%. Those two are getting hammered today. But because we have collar trades on those two positions, I'm so excited about Applied Digital and Coreweave. I think they are going to be two of the highest flying stocks from a percentage standpoint in all of 2026. And I just see this as such a great opportunity, opportunity to leverage into more shares on both of these. Applied, we have long puts at a 28 strike price, and they're trading all the way down to 22 and some change right now, which is fantastic. We'll be able to add some more shares there. Coreweave, our long puts were a little out of the money. Now they're about $5 in the money. They've lost a little bit since we bought those long puts, but still, it wouldn't bother me. Let me say, I am a little bit bothered that the sell-off on Coreweave is to the degree that it is. I think it's unjustified. I think it's silly. I think it's a lot of overstoked fears that people are having. But at the same time, I see this being a temporary thing, and I see Coreweave rebounding in a really, really big way. A couple of times as I've been talking, I've seen the Micron trade go as high as 4 to 4.5% profit. I show right now that I'm 2.7% profitable. I'm going to make an attempt. Give me a second. I'm doing this on another screen, so bear with me for just a moment. Trying to remember exactly what we got into Micron at. Bear with me for just a moment. We entered the Micron trade. We get into Micron. $4. I got in for $4.06. I'm going to set up an order right now on Micron. I showed the mid at 397 right now, but it was 410, 415. I know it's a really, really small profit. If I can get out of Micron today and I can get out for anything over 420, I'm going to take it very happily. I just saw it jump to 415 for a second. So 420 is not what I think is an unrealistic way to get out. So I'm going to set a limit order at 420 and see if I can exit Micron today before the close of the day. And if we're unsuccessful in getting out of Micron before the close of the day, then tomorrow after earnings, maybe it does exactly what Oracle and Broadcom and some others have done. And no matter how good the numbers might be, and I think they actually will report good numbers, no matter how good the numbers might be, they might have a sell-off anyway. That's been the pattern that most of these companies have been following. So I wouldn't expect anything dramatically different with Micron. So we'll keep a close eye on that, but I will come back around and check. As you can see, the sell-off has accelerated now after looking like it was improving a little bit in the first couple of minutes I was talking. Now I believe the NASDAQ is at its lowest point of the session and continuing lower. Brace yourself. We're probably in for a bloodbath today. It's probably going to get worse than it is already, or something weird's going to happen and it's all going to turn around and all be going back the other way. And you never know. You never can tell. It's a squirrely, weird market that we're living in right now. So let's do the best we can with it. I got my Micron in order in place. I'll get this posted right away so that you can do the same thing. Nothing really to talk about with other collar trades right now. We're in good shape on that. Hope you survive the rest of the day today, and I'll be back on tomorrow. Tomorrow, I'll probably do a podcast more closer to the normal time around the close of the market. All right. Thanks, everybody. Have a good rest of your day. Bye-bye.